And you'll see my analysis today. If the S&P breaks out of this pennant here, this is a bullish pennant, right? Technology might kick back in, and that is where the volume is. And also, it is summertime. This is the busiest travel day of the year as far as vacations. This is where a lot of people take vacations. So that might have something to do with it. You know, the news out there, again, the news is up and down. So we'll look at all that. So what is Gino Live about? Just a quick agenda. Our fast 5 picks. You know, I got more than 5. They're over here. There you guys go. You pick your favorites. Let me know in the chat box. All you have to do is go down here to the screener and hit bull stocks or bear stocks, and there's your fast 5. Scan through, find your favorite setup. And we'll go through those again in today's show to see which ones we all like as a group. The lesson today is reading great dividend opportunities. We're going to go into great dividend opportunities. Market sector setup. Why do we do this? It's a top-down approach. We look at the market and we say, is money coming in or out of the market? Which sector is the most bullish if it's coming in? What sector is the most bearish? So basically, we're looking for the leaders of the market. And once we find that sector, which stock is setting up in that sector, because if the money's flowing into it, it's going to get a big move. Just like Luke said, the money's coming into the market, that's volume. Volume makes stocks move. All using the payday cycle. Payday cycle is the easiest way to read this. It really is. It's the easiest way to read it because red light, green light, the Heikin-Ashi. If you don't understand Heikin-Ashi, definitely tune into Micah's classes and learn that. And a bunch of Gino trading gems. Real quickly, guys, we got some we got some messages coming in. And that's good because if you have any questions, right down there, you see that face? That's me. It explains in detail the Heikin-Ashi. I mean, and honestly, you know what's funny is Micah told me about this years ago, the Heikin-Ashi MACD thing. And I'm like, yeah. I already had systems. I already knew. I didn't need it, is what I'm saying. But then you know what? After I started looking into it and he said, hey, can you help me with the software? Can you look at this? Can you look at my system? I said, oh, man. Let me go watch this class. And I was like, oh, my God, this Heikin-Ashi thing is pretty cool. And he's like, I've been trying to tell you that for 10 years. And he was right. This Heikin-Ashi thing is really cool. I mean, look at it. It's green most of the uptrend. Only when it does a swing, a true swing high, does it turn red. And it's easy to manage your stops. It goes below the candle. And as soon as it goes below that candle, you're stopped out or you wait for it to turn red. I like to keep my stop loss under the 10. See this 10 right here? And I'd have been stopped out right there. And there's your bullish doji above the 10. You get back in here. Look at the green light. That's green. Red light out. I mean, it's so easy. That's the market. It's very important, mucho importante, that you guys understand that there's a candles up here, right? If you don't have this, please do this now. Click the chart types, put a star next to candle, and a star next to Heikin-Ashi. Is it Heikin-Ashi or Heikin-Ashi? Is that Heineken? I just call it Heineken. Okay, so Heikin-Ashi sounds more German than it does Japanese. But anyway, Heikin-Ashi is right here, star. When you do that, you get this quick link for candle, Heikin. Candle, Heikin. Now, what's the difference? Because if you understand regular candles and you start comparing it to Heikin-Ashi, you're like, wait a minute. How is it this was a green candle and this one is a green candle? That is a swing low. So people that know, all the traders out that understand regular candles, is that a nice swing low off the 20? Is that a nice setup where we've pulled back, found support down here on a major moving average, rallied back above the 20, which is a breakout above resistance, pulled back, tested that support that we got above, So resistance becomes support, and we follow through. And by the way, a fat hammer candle, reversal candle on the 20. Does everybody see the swing low setup on regular candles? Yes or no? And also based on regular candles and Heiken Ashi, does everybody see the pennant? So it's a bullish pennant. Why? Because the flagpole goes like this. And then it does this sideways consolidation. And then what happens? It breaks through to the upside. We talked about this yesterday. Wow, Duolingo is unbelievable, right, Tibbs? It makes you want to learn what they do. There's my picks right there. My favorite ones have an alert next to it. See that? Reds are bear. Gold. Let me just fill you guys in on something. Gold might be bearish, but I almost always only do bull triggers on those. Why? Very undervalued. Very undervalued. Very undervalued. Why? Because I don't want to short something that has very, very good fundamentals. I'll buy on dips on those, but I will do this. I will sell naked puts. These are my, just so you guys know, these are for my will strategy list. These are stocks I like to sell puts on, take assignment, and sell calls. So I don't like to short them, even if they are bearish. So the only thing I'll possibly short are the red ones. That's the secret I want to let you in on. The green are definitely bullish picks, but the gold are always bullish, whether they're bearish trend. No matter what the trend is, I only do bull triggers on them. Okay, guys? By the way, change your MACD to 2010. Change your MACD, and it works really good on a lot of stocks. See how it's 1226? Change that to 20 or 1020, and guess what? This will cross over a little faster. A little faster. Now, question for you. Do you see the divergence? The market made new highs all the way to here. But the MACD did not. That's called losing momentum. That's why they call it a momentum indicator. Moving average convergence divergence, momentum is created because when you divide it by 9 and you get a flat day, it wants to go back to 0. So unless this is making and expanding, so what happened here? Why did this not make a higher high? How come when we made a high right here, the MACD made a high? We made a new high, the MACD made a new high. We made a new high and the MACD did not. That's your divergence clue right there. And that's why when you see a red candle up there, you go, oh, this might be the top. Now, why is that? Because you see this run right here? It should have gone higher in order for this to go higher. And it's very simple when you look at the math here. Here to here, and then from here to here, and then from here to here. What's the big? See how big this run is? That's expansion. See how short this run was? It's expansion, but it's not as many points. And look how short this one is. See what I mean? So you got your wave 1, 2, 3, 4, 5. See that? 5 is usually smaller than 1. 3 is usually your biggest. Then you got your A, B, C, D. Then we're going to get our 1, 2, 3, 4, 5 again. Yes or no? You guys get that? That's Elliott wave. That's actually called Gino wave. I threw something in there you probably didn't notice. Okay. Bounce, not trusted. Rotation in. Wow. 75% above. That's a lot. Above the MA20. But only 41% above the 200. That's phenomenal, guys, right? Short-term rip without structural support. Wait for the 50, the moving average 50, to expand before trusting the move. Structural breadth trails. Signs of laggard trend. So it's telling you it's not as strong of a trend as you're looking at because of this. What does this mean? Most stocks are above the 50 and 20. MACD weekly, bullish trend. RSI, bullish. What's this? Only 41% are above the 200, which means basically this. Make sure you have the 200-day moving average on your chart because that's going to be resistance on 60% of your stocks. Does that make sense? Most stocks are still below the 200. So it's probably because it dipped down. But look at this, isn't this what you want to see over here though? The MACD weekly is fading. But anyway, so there you go. So now if you go, oh, hang on a second. View all 17, here we go. You're going to have to go in here and filter these out. This will be under technology. Let me see bull stocks in here. I'm only getting these. But if you go to like this, the bull stocks, just do all, look for the software ones. Because these aren't in the XLK, they're in the software. And there you go. But I'm going like this and sorting it. I've already sorted it right here. And that would be like Team. Team is the software. Check this one out. Let's go check out Team. I might have this in my list already. And there's that 200. See the 200 up here? That's what it's talking about. So this might be a bullish trigger, but do you see the 200 up here? And that's okay because that's a target. Duolingo, there it is. Duolingo, already have the trigger there. So just like, okay, do you guys see that? What is that right here? What is that right here? Everybody answer me that. What is this moving average right here? Do you see the flag? Is it support or resistance? Is it support or resistance? It's definitely resistance. Software application. That's the 200 it's trying to get over. Do you think if it gets over the double top and the 200, there's free error? There's no resistance after this. You might be one of my favorite picks at 35 bucks. Right, GitLab? Does anybody see a pattern? Does anybody see a cup and a handle? Does anybody see big volume confirming right here? You are one of my favorites. Pop quiz. Good dividend, yes or no? Let me bring up the data and you guys tell me. Does it look like they're raising dividends every year? It's a 26% compounded annual growth. Isn't that great? Five-year compound is 26%. That means if you go back last 5 years, it's up 25% of their dividend. They've raised it 9 years. Look at raise, which means they have more money to give you. They're giving you a raise every year. The company you work for give you a 26% raise in the last 5 years. Better, that's about inflation. Strong free cash flow, shareholder friendly. Look what's left over. Good dividend.